what is a correction in the market?
A market correction is essentially a temporary decline in the price of a stock of for a company. So what it means is that that stock has gone to its all-time highs or very recent highs. So for example, Nvidia was trading really, really high as at the end of last year. And what we experienced like 2 weeks ago is what you could call a correction. So it's kind of taking it back to, and what happens is when it's really high, it means that a lot of people are very bullish. The term bullish means that they are really excited about the prospects of this future, of this company's future. So they are buying a lot of the company shares, which is taking the price very high. So when a correction happens, it kind of just stabilizes it back. Like everyone is back to kind of base, and corrections, they have like their different levels. It could be 5, could be 10, could be 20, depending. It could last for as long as a few days to a few months. And yeah, that's what a correction essentially is. And sometimes for very savvy investors, corrections are opportunities for them to load up
To
on
buy, right?
the stock of the company at very decent prices, that is not just based off of euphoria, market euphoria. Because like we
Mm-hmm.
said on the last call, at the stock markets, the short term is a voting machine. So everyone is going off of the market sentiment or the sentiment of every other person that is playing. But in the long term, is a weighing machine. So you see that short term high will come back, and you get stabilization in the price, which can let someone that is still interested in the stock, to buy at that point.
Beautiful.
Yeah.
Yeah. Just to add, one of the things to avoid would be making investment decisions off of emotions. So you can see, I think one thing that probably happened with Nvidia, the correction is, a lot of people just following what other people are doing, like, oh, it's going down, so I'm going to sell. And
Doing
yeah, and you can never time the markets. That's one thing to note, that you can never time the markets. You don't know when it is at
can
the
never.
bottom. You don't know when it's at the top. That's why investors say it is always good to be in the market. So because in the long term, it has proven that it's always, or I mean,
Yes.
goes to the top. So yeah, so that's what a correction is. So you said bullish on. So can you explain what being bullish and being okay? You explain what being bullish is. The opposite of that is being bearish. So or a bull market
Mhm.
or a bear market. So what is that?
Yes. So it's essentially from like bull and bear market. So in a bull market, there's optimism, like the prices are rising and rising. You see a lot of increases, you see surge in the economy. There's a lot of capital going into all these high risk assets. In a bear market, there's pessimism, like prices are falling. What's happening is that market sentiment is that people expect that prices will go down. So
Mm-hmm.
they won't be participating, they won't be buying shares, and they will be selling as well. So when you say someone is bullish or the market is bullish, it means that there's excitement, there's optimism. When it's bearish, there's pessimism. Everyone is, not in a great mood about the stock market.
Okay, awesome. So I think that is where we're talking about quite a few things: stock markets, stock exchange, stock investing, stock trading. Okay, stock investing versus stock trading. In the last episode, we said something about
Yes.
day traders losing. I mean, 90% of day traders being linked with a losing history. So stock trading, I would just, this is a personal preference, like not to trade
Yes.
stocks actively if you are not experienced or if you don't have the knowledge of, the asset class, and you'll say, "Oh, I feel it to go up, I feel it to go down," or and you sit by your computer all day. So I'm more of a fan of stock investing for the long term rather than stock trading. And if there's one last thing to touch
Yeah.
on in this episode, I think we've gone through all that I've written down. Apart from a key, I would say, stock market investing strategy, I wrote down dollar cost averaging.
Mhm.
So, Barry, do you want to
Oh
tell us
yeah,
what dollar cost averaging is? I think it's something that our listeners should consider, especially if you are just getting your feet wet in the stock market. So dollar cost
Yeah,
averaging.
absolutely.
So
So
back to you.
I'll just I'll I will. It's just basically investing regularly. So if you have, let's say, $1,000 to invest, instead of putting it all in at once at one given time, what you want to do, or what dollar cost averaging is, investing very small amounts at regular intervals over a period of time. And so one is fixed and is very consistent till you invest the entire $1,000. And why you want to do that is this: because the market is always moving. So you want to take advantage of different swings in prices. So let's say the price is high today, is low tomorrow. On average, your average entry will be better once you invest like over a period of time, small amounts over a period. So it could be $100, maybe 10 every month till the end of the year or something like that. That's just like an example, not exactly that way. So what happens is, if the price is 150 today, you buy 100 at 150. If it's 140
Right.
the next month, you buy 100 at 140. So when you do your your average of your entry, you see that you've gotten you were in a long term will have gotten a better price entry on average for that stock, instead of just going all in at once at one given period of time.
Awesome. Brilliant. I think that you've touched on it all. And yeah, I said something. Did I say it in the last episode about me wanting to be a speaker now, speaking on personal finance and that? So in the first talk that I had this year,
Yes, I
I
remember.
I, I had this table where I did the monthly return of the S&P 500, and I just put it up now, and the S&P
Mm-hmm.
500 actually was in the negative for 3 out of 12 months. So what happens is that if you adopt this dollar cost averaging philosophy, I mean, and you invest, let's say, once every month, you get exposure to, although you get exposed to the bad, but you are not that person that, let's say, you just came into $10,000 and you just invest it in April when it went down 4%. Then you are like one of the unlucky
Yes.
investors in that case. But if you invest gradually and periodically, you get to ride the highs and not get too negatively impacted by the lows. So that is what
Much of the lows.
dollar cost
Yeah.
averaging does for you.
So yeah, exactly. Yeah, it's essentially, helping you hedge against the risk that BE said that you can't time the market. So
You can't.
you go gradually, periodically. Yeah.
Awesome. So we've
I
come to
think
the end
I
of
think this was a
episode
great one.
5 of Chasing the Bag podcast with Buddy and B.
Yes.
We thanks for listening. If you've
Yes.
listened this far, try to subscribe and follow us on YouTube, Instagram. Where else? TikTok. Listen to us on
So
Spotify,
I think
Apple.
we're on Twitter too, but our Twitter is not active.
Yeah, Twitter is not active at the moment. See, so handling social media is a career found.
It's a lot
Handling
of
social
work.
media is a career. But yeah, but Instagram, please send us a message on Instagram and we'll be sure to, if you have a question, we're sure to respond on the podcast. And yeah, we'll do that. So, Buddy, any final words from you?
Yes, just like we said, you don't, go into the market or invest based off of anyone else's, decisions or sentiments. You do your own research, and you always ensure that you dollar cost average. I think those are two key learnings from this episode, that if you take any two things away, DI and DCA, I think they will be helpful for any beginner who is, trying to test the waters with investing in the stock market.
Awesome. Closing words from me. This just came to mind. Don't panic. If you put $100 in the stock market today, say, and it goes to $80 or goes to 90, don't panic. Don't
ten
worry.
dollars,
Don't panic. Say, yeah, my money is going.
it will come
Don't
back
worry.
up.
Don't panic. All right. Thanks for listening, guys.